all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. In today's video, we're going to be talking about AMC stock and GameStop stock and whether they are a buy the dip. We saw the squeeze up. They made huge 100%, 200%, 300% moves in just a matter of days. But then the rug got pulled out from under them and they started to crash. Should we be buying the dip on AMC stock and GameStop? That's what we're going to be breaking down in today's video. I'm also going to be telling you guys why I think having diamond hands, so to say, is one of the dumbest things people are saying out there right now. If you're new to the channel, this is Touchdown Trades. We talk about the hottest stocks in the stock market every single day. So hit that subscribe button and everybody go down there and like the button. All right, so the Wall Street Bet Reddit crowd, we all saw what happened. It was absolutely amazing what happened to GameStop, AMC stock. They made massive moves like we haven't seen in a long time. The squeeze was real, but the crash was also real, coming off $400, $450 a share, back down to under $100 per share in just a couple days for GameStop, and AMC broke 20, and then we're down under 6 yesterday. So is this a buy the dip scenario? Let's talk about it. If you guys are looking for a new brokerage account or you're looking to get out of Robinhood, check out the link in the description for Webull. They're offering the Touchdown Trades community free money, 2 free stocks valued up to $1,850 if you use the link in the description. Also, check out the link in the description for the free trial to the private Discord chat and alerts where you get my buy and sell orders in real time. We called out AT&F 2 days ago. A day later, it's trading $1.50 higher, 40% profit for the group. You can come trade with us for free with the link in the description. All right, before we break down AMC stock, GameStop stock, I got to rant for 1 second. I've been seeing a lot of talk on social media about having diamond hands. Well, guess what, guys? I got paper hands, and I'm proud of it. I think people saying they have diamond hands, they're never going to sell AMC stock, they're never going to sell GameStop stock, is one of the dumbest things I've ever heard in my life. Here's the deal. You buy down here, you want to prove a point. You want to prove a point to the suits. You want to squeeze them. Okay. But if you're just going to say you're going to hold blindly and hope you bought up here at 120 bucks, you were up 300% or so to 500 bucks, and then you don't take any profit, that's just crazy to me. We're in the game to make money. Sure, if you want to prove a point by squeezing the suits, that's fine, but take some profit. That's how you show the suits. You make money. You don't hold blindly and get stuck in this crash all the way back down. That's just ignorance, and ignorance does not make money in the stock market. So I am proud to be a haver of paper hands. I got some paper hands. All right, now that my rant is done, I'm sorry, I just had to get it off my chest. Let's break down AMC stock first. So this has been crazy volatile. We saw the move up. It was heavily shorted back here from the $3 to $4 area, like 40 or 50% short interest. All the ingredients needed for the huge squeeze up to $25 a share. I've been seeing a lot of people on social media talking about AMC, how it's a good buy down here at $8 a share, and I could not disagree with that statement more. I think AMC is extended at $8. I think it's too expensive at $9. I even think it's too expensive at $7 a share. Let's talk about why. Although I don't think AMC is a good long-term investment at this price, I do think there are going to be opportunities for swing trades. So we'll break down those swing trades in just a sec. But first, let's break down why I think AMC is too expensive at $8 a share. So AMC has been on the verge of bankruptcy, but through raising capital by stock offerings, they have been able to stave off bankruptcy, and there's talk that they're going to be able to survive until at least mid-2021, which is really good news. Getting away from bankruptcy is always good news. But there is also some drawbacks. Drawback number 1, AMC owes $400 million plus in rent. They have been deferring their rent. They haven't been paying rent on a lot of their theater locations, and that rent is going to become due, and they're going to have to pay it. They also have $500 million. They also have a bunch of debt, tons of debt on the books that they're eventually going to have to pay off. So the shares have been diluted by more than 70% since the shutdown happened. They've diluted the shares in order to stay alive. They have to stay alive in order for the company to rebound, but the amount of debt they have on the books is overwhelming. So one good thing is one of their biggest competitors, Regal Cinemas, has shut down for good. So one of their competitors is down. This gives AMC more of a market share. A couple months ago, I made a video on AMC talking about how I thought it was a good buy at $4 or $5 a share. And the reason for one of the big points in my thesis that AMC was undervalued at those price points was the fact that they struck a deal with Universal to stream new release movies online. Well, that happened a couple months ago, and I'm here on the AMC website, and I don't see anything about streaming. All I see is on demand, and it's a bunch of crap movies that are a couple years old or newer movies that nobody wants to see. The new release movies you can't stream online. If AMC wants to survive, in my opinion, AMC needs to transition and find a way to get new release movies streaming online. They're not going to be able to survive by just selling movie tickets in person. They have to get some kind of streaming service going. There was talks of that, but I haven't seen anything of it of late. I think AMC has a better chance of surviving than GameStop, but there's no doubt about it, in my opinion, that AMC is just too expensive at $8 a share, $9 a share, $10 a share. Doesn't mean there's no swing trades that are going to happen from this. This was a nice swing trade right here from $6 support. You have support back here, and it ran up all the way to $9. That's a huge move. I think there could be another swing trade in this, and I'm not opposed to swing trading it. Using $6 to risk off of, it consolidates, and maybe it breaks out towards $12 a share. But you can't have diamond hands with this stock, or else I think you're going to be in big trouble. You have to know your risk, you have to know your profit target, and you have to get out when it's time. If you have to take an L, take the L. All right, let's move on to GameStop stock. I think GameStop is in bigger trouble than AMC. I think AMC can pivot. AMC can pivot to a streaming business model, sell tickets online, that type of thing. GameStop has no pivot, in my opinion. They have no option. There was a lot of talk about the Chewy guy taking a position. There was a lot of talk about the deal they struck with Microsoft. And I'm looking at this Microsoft deal, and it actually made me laugh how ridiculous it is. The deal consists of a few bullet points, and the biggest one, additionally, associates will be equipped with Microsoft's Surface devices that will transform the in-store experience and help unlock new retail experiences. So the big deal with Microsoft is they're going to get their employees tablets to walk around the store and look like AT&T employees, walking around looking like a phone store. That is a joke. GameStop has tons of debt. There is no way for them to pivot. Everybody's buying their video games online, straight from the consoles. The only reason somebody goes to GameStop is to get a secondhand game or to sell an old console and get ripped off at that. So I think GameStop is in big trouble in the long term. Short term doesn't mean there's not going to be any swing trades. There very well could be another swing trade here. We could get another squeeze. I think this $105 to $80 area is a good buy zone. You have defined risk at this prior low right here, and you could look for a swing trade back up towards $200 a share. But long term, I would be willing to bet that GameStop is out of business in the next 5 years. And that's kind of sad. I liked GameStop as a kid going there. It would always be fun going to GameStop. But it's just a harsh fact of the transition to e-commerce and downloading the games on your console. And if you're invested in GameStop and you believe that it's going to survive, I'm not trying to hate on your investment. This is just my opinion. That's going to wrap up the video, guys. The point of the video was not to hate on AMC or GameStop. The point of the video was to raise awareness that having diamond hands is stupid. You got to have a plan. Stick to the plan. Stop loss, buy zone, profit targets. You make money. Diamond hands, lose money. Until next time, I love all you guys. Peace.